It is a matter of fundamental fairness and straightforward arithmetic that fines, penalties, and awards levied against insurance companies for misconduct or non-compliance should not be shouldered by consumers. These fines should not generate profits for insurance companies when combined with the fixed insurance profit model. Yet with some accounting sleight of hand, this can potentially occur. The financial consequences resulting from an insurance company's missteps should be absorbed by the company itself, not discreetly embedded within the rate-making calculations that determine premium costs for policyholders. Fines, penalties, and damages should be explicitly and categorically excluded from rate-making equations, fortified by clear, unambiguous regulations. This is not happening in many jurisdictions today. Listen to this cautionary tale. Prologue. Imagine an insurance company, InsureCo, which has been fined $5 million for regulatory non-compliance related to claim settlement practices. Traditional rate-making. In traditional rate-making, the insurance company calculates premiums by considering various costs, including net earned premium, net discounted losses, net general and acquisition expenses, net investment income, and other revenue and expenses. Impact of including fines in rate-making. If InsureCo includes the $5 million fine in its net general and acquisition expenses, or other revenue and expenses, when calculating premiums, it may lead to several negative consequences. Consequences such as increased premiums. To recover the $5 million, InsureCo might increase the premiums for its policyholders. For simplicity, if InsureCo has 500,000 policyholders, it might increase the annual premium by $10 per policyholder to recover the fine over a year. This is an unfair burden on consumers. Policyholders, who were not responsible for the company's non-compliance, bear the financial burden. This contradicts the principle that fines should serve as a deterrent and penalize the company, not innocent consumers. Undermining the deterrent effect. If fines and penalties are simply passed through to consumers, they fail to serve as a deterrent for bad behavior by the insurance company. InsureCo might not be sufficiently motivated to improve its practices if it can offset the financial impact of fines by raising premiums. In the heart of Econoville, where vehicles weave through the streets and families navigate their daily lives, an unseen cost subtly, yet persistently, infiltrates the financial landscapes of countless households. This cost, concealed and imperceptible, quietly seeps into the mandatory auto insurance premiums, silently extracting from the wallets of the unsuspecting. Chapter 1: The Silent Burden. Econoville's diligent families, navigating through their financial journeys, remain blissfully unaware of a silent burden subtly infiltrating their carefully planned budgets. This burden, originating from fines, penalties, and damages levied upon insurance companies for their missteps, silently, yet significantly, impacts the lives of the innocent. Chapter 2: The Guardian's Veil. The Financial Services Regulatory Authority of Econoville, FSRAE, portrays itself as a guardian of fairness within the insurance industry. Yet, its unjustified confidence, when probed further, conceals a veil of ambiguity beneath its protective exterior. This ambiguity potentially allows penalized insurance companies to discreetly pass their fines and penalties onto unsuspecting citizens, embedding them within their insurance premiums. Chapter 3: The Paradox of Trust. In a world where common sense should reign supreme, trusting a penalized insurance company who has been fined for a breach of trust is a paradox and a questionable regulatory practice. The people of Econoville, bound by law to purchase auto insurance, unwittingly entrust their financial well-being to entities penalized for their own misdeeds. The very concept of relying on these companies to not pass on their financial penalties to consumers, without explicit regulations, defies the principles of fairness and common sense. Chapter 4: The United Call for Clarity. Voices from across Econoville began to unite, their echoes resonating through the streets, calling for clear, transparent, and fair insurance practices. The collective voice, a harmonious and unwavering plea, sought explicit, clear, and unambiguous regulations that ensured fines, penalties, and damages were never silently passed on to them. Chapter 5: Lighting the Path Forward. A flicker of hope began to light the path forward, illuminating a future where regulatory guidelines were not mere principles, but explicit, enforceable rules. A future where the financial penalties of insurance companies were never hidden within the premiums of the innocent citizens of Econoville. Conclusion. The tale unfolds, revealing a story of unseen costs, a narrative that beckons the need for clear and fair insurance practices in Econoville. It is a story that continues to be written, with each voice, each call for fairness, and each step towards transparent regulatory practices, crafting the chapters yet to come. In this tale, the people of Econoville stand united, driving towards a future where rules are clear, practices are fair, and no unseen costs are borne by those who are undeserving. And while the story is yet to find its ending, the journey towards a fair, transparent, and just insurance landscape continues, with the hope that the future chapters will be penned with the ink of fairness, transparency, and unequivocal clarity. Epilogue. The story may be fictional, but the essence is real. The call to action is genuine. Let us raise our voices for clear and fair insurance practices in auto insurance regulation and pricing. Let's stop trusting the companies that have been fined. Let's clearly state in regulations that fines, penalties, and damage awards cannot be passed on to the citizens of Econoville. Let's demand that our financial services regulators show us the rules and regulations in our statutes and laws that explicitly protect consumers of auto insurance from this type of accounting sleight of hand. Every voice, every action, counts.